very warm welcome to you as you join us on today's episode of Tax Matters. My name is e-WHT Matuluko. A few weeks ago, we brought you the story of the sensitization workshop that was organized by the Revenue Accounting Department of the FRS for stakeholders, ministries, departments and agencies, FRS field officers, and banks who act as collecting agents for taxes. The aim was to bring those stakeholders up to speed on government initiatives aimed at securing taxes collected. Ardent viewers of the program will also recall that on last week's episode, we had a guest in the person of Mr. AMYMAT, who spoke copiously about the roles of that same Revenue Accounting Department in the risk management activities of the FRS, in making sure that there are controls, that stakeholders are kept in line to do what they're supposed to do so that our tax revenue is safe. And so today, we are revisiting the workshops held by the Revenue Accounting Department so that you will also be brought up to speed on new trends in taxation. My name is e-WHT Matuluko and the program is Tax Matters. Coming straight on the heels of the Abuja workshop, the train moved to Lagos on Wednesday, June 26, and to Port Harcourt on Thursday, July 4th. The gentlemen and women who presented the papers in Abuja were also on hand in Lagos and in Port Harcourt. We are going to share with you snippets from their presentations, and then we'll move into the question and answer session that followed the robust paper presentations. But before then, these words from the chief hostess.
This is one of our series of sensitization workshops that we're holding in different zones of the Federation so that we'll be able to talk to our customers who are our taxpayers. We want to sensitize you on our forms of payment mode. We also want to tell you what government is doing in the areas of payment of taxes. And also, we would like to hear from you whether there are areas that we are actually not doing well, so that we can take that home and improve our services to you.
GMIX is a subset of the Economic Reform Governance Project, which supports the public resources management through modernizing fiscal process using better methods, techniques, and information technology in the use of government resources. We're going to have an integration with some of the existing system, that of the central bank, we call it REMETA, the IPPIS, that's the Integrated Payroll Personnel Management System, the FRS, the NNPC, the DPR, Customs, among others. All these, particularly those agencies that are generating revenue into the Federation accounts, will consolidate and ensure that all revenue that comes into the federations and the way and manner it is being disbursed are being taken into consideration. Now, the next concept that I want to talk about is the TSA concept. TSA is, as I earlier said, the Treasury Single Account. It's a unified structure of government bank accounts that gives the consolidated view of cash resources or cash position. At a glance, you will know what's actually happening in terms of the accounts being maintained by the ministries, departments, and agencies, as well as, or alternatively, all the accounts will be put together and will be centralized at the central bank, and that's what we call the TSA. This is how the TSA going to operate. The TSA concept is virtually the ministries might not maintain bank account anymore, particularly in the commercial banks. All funds that are meant for the government are being centralized at the central bank. The reason why we want to do it that way is because we have discovered over the years a lot of funds are being kept in the accounts, and government is, on the other side, is borrowing to finance some of the budget deficit and even to finance the budget as well. Now, if you look at this, particularly the TSA implementation trend, the 6 pilots, MDS, was brought on board in 2011. And about 87 ministries were also added in 2012. In 2013, early part of this year, we were able to add about 116. That brought the total of the ministries, departments, and agencies under the platform of TSA to 209. We are also engaging about 16 ministries, departments, and agencies that are security-related agencies, and we have started engaging them, and hopefully we are going to engage, ensure that they are also part of the TSA letters by the end of next month. We have about 350 MDs still left outside Abuja. The area of coverage of the TSA includes all the payments, all the receipts, including loans and grants that are being handled by ministries, departments, and agencies that are fully funded by budget, or those that are partially funded through the budget, and as well as some of the donor funds, trust funds, security funds, and all money that comes into the Federation are being captured and being processed through the TSA concept. Now, before the implementation of the TSA, government cannot determine the cash position at any given time. Government cannot ascertain what exactly the ministries, departments, and agencies has at their disposal. A lot of commercial banks accounts are being maintained by the ministries, departments, and agencies, despite the fact that the financial regulation says that only 5 bank accounts should be maintained. But some of their MDs are maintaining over 20 accounts, 30 accounts from different ministries. And all these accounts, different funds, different balances are kept. And in most cases, those funds are not being utilized. And at the end of the day, they will just bring back the money to say that these are unspent balances. And they will complain to say that the process of the procurement is cumbersome and they cannot spend the money because of the process involved. So these are some of the challenges we have before the TSA. And we also discovered that there was a growing domestic debt and borrowing not aligned to the needs. Constantly, government is borrowing to finance the budget. The fact that there's so much, funds are being laid down in some of the MDS account, and government continue to borrow on the other side. And the idle cash balances and unspent balances are also in some of the MDS bank accounts, and it's not being, utilized by government effectively.
Still talking about Treasury Single Account, TSA.
So TSA is not only about payment. It's also that you are aggregating the other side of the revenue into a single account. So both the inflow and the outflow will come to one pot. It also enables control under a single account. Instead of you having multiple accounts that make it more difficult to manage, with also associated costs and time, now your focus is only on single account. What it that entails is that you also have to do your reconciliation well. It also eliminates idle cash balances. As earlier been pointed out by the former speaker, the concept of TSA is that you can manage your cash effectively. And before the pre-TSA, we have a situation whereby the federal government borrows from central bank through ways and means, whereas it's had idle cash balance even within the central bank and even within the commercial banks. So what is happening is that the government goes to capital market to borrow money and carry out the private sector, because the government can borrow at every cost. The private sector cannot borrow at every cost. But with the effective cash management, we found out that they have a comprehensive view of their cash in one pot. Instead of having a debit in one account, because for instance, Ministry of Works need money, and Ministry of Health have idle cash. Because Ministry of Health need money, the main account of the government, there is no fund. So the government has to go and borrow money to fund Ministry of Works. Whereas Ministry of Health that has idle cash balances, not even remunerated by banks in form of interest, the government will go borrowing to assist the funding of Ministry of the one that need money.
By now, we are sure you are talking give me's, you are talking TSA. That's in order. Having laid the foundations with the paper presentations, what are the implications for tax collection? What are the linkages between these government initiatives and tax collection?
We have various stakeholders in this respect. The parties in the FRS collection system include the taxpayer, the ministries, departments and agencies of government, banks, FRS offices and other collecting agents. The relationship between the FRS and other parties are to be guided by ethical codes of the respective parties to assist in understanding the differences between what is right and what is wrong, and in applying that understanding to the decisions that you take. It is expected that banks and MDAs will be guided by their codes of business ethics. The FRS, by its code of conduct for employees and professionals, by the codes of professional practice issued from time to time by their various professional bodies. Like we have the MDs as our agents. When they want to pay to the contractor, they will have to deduct and pay over to us. The FRS expects the taxpayer to always discharge their civic duty by making payment of tax as an at-when due. It should be understood clearly that making payment is not just good enough if information required for processing the transaction is not complete to guarantee the receipt of such payment by government. This implies that the taxpayer must provide all the information required at the time of payment. We have seen in recent times where schedules are given to the banks and TIN numbers will not be there. The required informations are not there. It becomes very difficult for the banks to post these forms.
We'll hear later on about TIN. The MDAs, when they collect or remit or deduct taxes, they are supposed to remit with all the necessary information in it. We've been having a lot of issues with MDAs. That's why we're here today. Some of them will complain that they remit taxes to the banks and the banks are not, remitting it to the federal government. The banks, on the other hand, says the MDAs give them, instructions without it being complete. Therefore, they cannot remit. The expectation of FIRS from banks are well articulated in our collection agreements. Some actions that are not acceptable to FIRS are as follows. Refusal to post at the very moment the tax is paid by the taxpayer. By giving such excuses like there is no network or that the network is bad, that there is no TIN number. You heard our director, Mr. Kengu, that says that there's a lot that has been done by the TIN generation for the past 8 years. It's even compulsory that before you open an account in a bank, that you must have TIN. It was also agreed by the banks long time ago that even if you had opened an account and you didn't have TIN number, that you will recall to the customers now, and they should provide TIN number for you by going to FIRS to obtain that TIN. So we shouldn't hear that there is no TIN, because there's also a circular to the MDAs by the Accountant General's office that you must not deal with any contractor without TIN number. It's also an offense. I think we are talking to see how we can penalize the MDAs. If they bring payments without TIN to the banks, then there must be sanction to them as well. No schedule for collecting banks is an offense. I think we are articulating that with OAGF to know exactly what to be done so that the money for the government will get to the government coffers right on time.
The three-legged workshops provided ample opportunity for frank exchange of views between the FIRS and the stakeholders. The stakeholders were able to bear their minds on the challenges facing them and to provide solutions on the way forward.
The first thing will be to commend the FIRS. We've really come a long way. I know what it used to be like, and a whole lot of us here, especially from the banks, will really commend how far we've gone in the past 5 to 7 years, from the introduction of Pay Direct to where we are today. But what I will quickly add at this point is that we need to learn from what we've passed through when we were introducing Pay Direct in the next stage of automation. But one of the biggest problems we had with Pay Direct was that everything that was automated, at the period it was being conceptualized, one of the things we asked for was that the receipt issuance process also needs to be automated. Unfortunately, for some constraints, that was not completely added to the project. What it did was that a whole lot of the process was streamlined, but the final part, which is what the taxpayer sees, which is the evidence that I've made this tax payment, the completion of the whole transaction, got bogged down because this receipt still needed to be signed by human beings. That manual process, in fact, if there were 7 processes in the tax payment process, the first 6 will probably happen in 2 or 3 days, but that final one could extend it by more than a month. I know it's not completely the problem of FIRS, as at that point we learned that there were regulations that needed to be changed. The reason why I'm bringing it up here is that if we automate the process and we don't push through things like regulations at the National Assembly to allow the acceptance of electronic evidence of payment, we will do a fantastic job. But to demand that makes the payments, whose experience counts the most, much will not change. If a customer can walk in and pay his taxes, and I issue him electronic receipt, and he goes to the tax office, and someone is that, today it's available, someone in the tax office checks through and sees that, yes, you did a job for company A, they took 10% of what they were supposed to pay you as withholding tax. Now that you're here to pay your annual tax, you don't need to provide this for this amount. If that works, in fact, it would, on FIRS part 2, your collections will go up. That's one. The second part is on the additional channels that are being added. We know what happened with the tax cards that were introduced. Fantastic process and everything. We pushed it, but we realized at the point of selling it to the customers that it's a retail banking solution. It's a retail solution to the extent that a typical corporate would not be able to use a card. A company will not, a structured company would not allow only one person make payment, except if he's the owner of the company. And in most cases, they don't get involved in those kind of administrative processes. What we realized at the point of selling to the customer is that they require at least 2 people to authorize that transaction, and it was non-existent for the tax card. The same thing will be replicated in POS, it will show in ATM, it will also show in web transactions. So as it is, for most of the people that are here, which is a corporate, a lot of people here from MDAs and a lot of corporates, what I think we should emphasize on will be probably the online transfers through banks. If you can streamline that and get a process that will allow people to sit in their offices, sign on to their banking applications, make these payments, and it hits the bank. And in fact, at the point of making that payment, it could actually get processed, and tomorrow the man goes to the tax office, irrespective of what the bank did, and get evidence of payment. It will streamline a whole lot of things.
I'm more concerned about the security of the whole thing. As we know that all these things will require internet connectivity, and a lot of internet fraud going on these days. So I'm sure that a little action of a hacker can destabilize the whole system. I want to know whether there is any preventive measure that has been propagated to mitigate all this. Thank you.
It's a kind of 2-in-1 question, please. First of all, I noticed that the GIFMIs and all these reforms are somehow restricted to the federal government, tier of government somehow. It appears there is no mention or correlation or reference to the states and even the local government. So I want to know whether all these reforms will be done in isolation of the other tier of government, especially at the states and local government level. Or probably it will be replicated maybe in due course, I don't know. Then secondly, I observed that you mentioned that a number of accounts being maintained by the MDAs will eventually be, moved to the central bank. And we all know the implication of that. Because, for us as bankers, we definitely have to start looking at how do we make up for whatever we are losing in terms of that, despite the benefits, accruing from this system.
I hope the authorities are looking at the impact that closure of these accounts will have on the financial system.
It has been so challenging getting either reversals or refund when the need arises. Why is it so? And going forward, can we make it very easy for either reversals or refunds after settlement has been sent, given all evidence that there's a need for these reversals or refund?
I think we should appreciate FIRS in the first place, because for so many years, refund process had not started. And for something that has just started, of course, you have some challenges. And that's why we're discussing. As these challenges are being addressed by FIRS, the system will be improved. You can also admit that most people that are applying for refund are getting it now. The banks, you are getting your refund. If you have one or two issues, where refund is being delayed, I think it may be because of documents that are not ready. We have checklists. If your documents are not clear and they're not, according to the checklist, your refund is delayed. But if all documents are okay, most of you will testify that within 1 month or 3 weeks, as the case may be, even less, you're getting your refund.
Coming with this, we're going to implement e-receipting. That means as the system is sweeping, we are also sending e-receipt. You don't need to really come to our office and say, print my receipt. You can print at the comfort of your office. And credit notes, same thing. And yes, the additional channels. Now for the bankers, I can disclose it because we are about to go live. NIPS have developed a solution just like e-bills pay. It's called e-tax pay. I am actually marketing it now. It's e-tax pay. That is the solution that is going. The corporate are going to use, for corporate payment of tax in particular. And like you have rightly suggested, that's the way it's going to work. It's going to be integrated to your banking applications, so that just a customer like me or any corporate can log into his internet banking and then use that e-tax pay to pay tax, or other internet banking platform for the banks and pay, do your transactions.
How long it will take for you to clear my container?
I dey do am, Oga. Then Sable will go bring our team.
Our team? Which team?
Custom don't change, Oga. I never ran Sable.
I want to concern FRS with my business. I will talk to Gaba myself. You are fired. Oga Gaba, which one be this our team again?
The taxpayer identification number now the only way where you fit take do business with Nigerian Customs Service now. You fit process your own free tin, sharp for any FRIS office.
Soji,
you don't sack me, no.
Get our team now.
This message now from Federal Inland Revenue Service and Nigeria Customs Service.
Time. It's time to go. But then we're going to be here again next week. In the meantime, we believe that we have further contributed our quota towards making you understand the workings of the Nigerian tax system. And so please join us next week on this same station, same day of the week, for a fresh episode of Tax Matters. Have a good week ahead.